Good day, my name is Elfreda Jonker. I'm the Client Portfolio Manager at Alphinity Investment Management. Today I have Thomson with me. He's one of the Global Portfolio Managers, and today we will be talking about our outlook for 2024. So Jeff, as a starting point, there's a lot to look out for when constructing global equity portfolios. Let's start at the top. What is your macro outlook for 2024?
Thanks, Elfreda. Broadly, I'd answer that in three sort of buckets, which are interrelated, but growth, inflation rates, and the geopolitics. So in terms of growth, the broader picture is one of decelerating growth, still positive,
Yes.
but decelerating. So the US economy will grow about 2.4% in real terms this year, and most people expect it to grow about 1.3% next year. So two points out of that. One, 3 points. It's decelerating, but still positive. So we so far anyway seem to be avoiding the hard landing scenario, but better than most people expected. And really, I think that the big story there on the growth side has been the consumer. The consumer generally, the job markets remain positive. Most people have jobs. They're getting paid more year on year, and they have fixed mortgages, certainly in the United States. On rates and inflation, clearly, again, fairly similar story in inflation. We had that really strong spike in inflation coming out of COVID, and you've again seen a sort of fairly steady and more recently accelerating deceleration in inflation. And frankly, everything we're seeing and in terms of the forward-looking indicators would suggest that continues for in the near term at least. And I guess probably the pertinent point here is that if the Fed does indeed do nothing, you're going to get almost an automatic increase in real interest rates. So as inflation does fall, and if they do keep interest rates where they are, real interest rates will increase. So I think it's a reasonable expectation from our perspective that you are going to see rate cuts, and potentially quite significant rate cuts initially, just reflecting obviously the pace of increases that we have actually seen. And then in terms of geopolitics, the only thing I'd say is, I think it really is pertinent to just reference the fact that there is a wide range, and perhaps unusually wide range of different risks. At this point in time, we think that they're all, are reasonably priced, but, everything from US elections, the Red Sea, Middle East, Ukraine, all of those, you certainly have to be aware, and any good investment strategy needs to factor those in, and certainly we would pivot to the extent that those impact the outlook for growth and rates.
Yes, all very important, diversified themes to keep bear in mind. So let's look at what's important for us as global equity investors. What is your outlook for corporate earnings into 2024?
Elfreda, really at a big picture, it's fairly similar, I guess, to the growth picture. That corporate earnings and revisions, probably more importantly for us, peaked in 21 and have been steadily decelerating. And so that's both in terms of the number of analysts upgrading and downgrading, but also in terms of absolute revisions. So you've had a fairly lengthy downgrade cycle, sort of starting somewhere in 21, and probably in the second half of last year, you saw some signs that is starting to stabilize somewhat. So certainly in terms of the number of analysts upgrading and downgrading, that's probably fairly equal. And that the negative revisions, it's still modestly negative, sort of in the order of 0.5% to 1% negative in terms of this year and next year, but not aggressively so. And if you look at the consensus expectation, so at the moment, analysts expect about an 8% growth in earnings this year, accelerating somewhat next year. I guess if you pushed us, we would probably see some downside risk to that number for this year, just as the economy continues to decelerate.
That's for the US market.
That's for the US market. But we don't see at this point, a very significant downward reset in earnings expectations at a top level.
Yeah, so definitely a bit less bad on that side. So let's pull that all together and talk about the global equity portfolios, and what are some of the key themes that you are looking for 2024, and perhaps some of the positioning changes that you've recently made.
So I'll probably start by saying, again, just to, we have 25 to 35 stocks in the portfolio, all high quality, and again, probably, diversified as much as we can across different sectors, different industries. We love, idiosyncratic ideas, and we would love that diversification. What they all have in common is a really strong earnings thesis. In terms of the broader thematics, obviously we are exposed to some really exciting thematics in terms of AI, technology, semiconductors, but also more broadly, electrification, particularly within industrials. Some really good stories in financials, consumer, for example. So really touching a lot of the thematics that you would expect us to. I'd probably just call out one broader change, and again, this is probably this has come at a bottom-up stock level, but we have the portfolio has shifted out of defensives probably over the last 6 to 12 months, and I'll probably call out one name. Pepsi has left the portfolio. That's been it's a really high quality business. We do like the business. It's been in the portfolio for some time. We sold that just really on what we felt to be underappreciated earnings risk, really as inflation starts to fall, and the outlook for continued pricing across their different products, but also some headwinds around the obesity drugs. And where a lot of that capital has gone has been sort of somewhat more cyclical ideas. So we've added, for example, SK Hynix on the semiconductor side, really on a view that the DRAM market and HBM market has turned, and there's some exposure, peripheral exposure, I guess, to AI within that story, but also somewhat slightly more cyclical ideas in industrials. So we added Parker Hannifin, for example, very high quality, diversified industrial business with what we believe to be quite a differentiated story in the aerospace market. So again, very idiosyncratic, but probably the thematic that touches all of the stocks is just that real conviction around where we believe that earnings are underappreciated. Yeah.
Great. Well, thank you very much, Jeff, and thank you for listening. For more information from the team, please visit our website on alphinity.com.au. Thank you.
Thanks.